Welcome to Home Biz Tax Talk. My name is Lysandra Everett. I am the Home Biz Tax Lady, where I help home business owners win the tax game. Home Biz Tax Talk airs Monday through Friday, 9 o'clock-ish. And when you tune in my show, you're going to hear about topics that are important to the home business community. Okay, so mortgage fraud is really not a tax topic. However, there are taxes involved, and we had some discussion in a group of mine that covered this topic. So I wanted to come and talk about this to my audience as well. I've done a video about this before, but it's been a heck of a long time since that happened. But you know what? Here we are. So what exactly is mortgage fraud? Well, mortgage fraud is when you are lying to get funding for real estate. There's two types of mortgage fraud. There's fraud for profit, which is usually done by the lenders and appraisers and underwriters, those folks. And then there's fraud for housing, which is usually done by the purchaser. So there are those two types. And the thing about mortgage fraud is that, it is on the rise. I was looking at a statistic that showed the last statistic I saw that said one out of every 109 applications have indications of fraud. In the latter part of 2018, there was an overall increase of 12%, but specifically focused on people lying about their income, that's up 22%. So it really is on the rise, and it is a concern for lenders, especially after we went through that whole housing debacle back in, 2008 or whatever that is. So mortgage fraud is really, something of concern. So how are my self-employed people involved? It usually starts with the conversation that goes a little like this. I would like to amend, the last 3 years' taxes in order to claim these, all these additional expenses. And as a tax professional, that makes the antenna go up. Like, why are you telling me you made this mistake for 3 years that you didn't claim all this? And so normally you get to the point where you find out it's because of a mortgage loan, okay? Now, one of the things that you need to know is that it is not illegal to amend your taxes to qualify for a loan. So if you go and amend your taxes to show more profit, you pay the tax that's due, you can do that to qualify for a loan. But if you go back and amend those taxes afterward to claim additional expenses, while that's not against the law for taxes, that's when you start to commit mortgage fraud, because then you're lying about your income. Okay, so for my self-employed people, so that you understand, the profit that you show, that is what the banks use to determine whether or not you can actually pay the loan back. So if you're claiming that you're profiting, $50,000, and that's what's needed to qualify for a loan, and then you go back after you get the mortgage and deduct all of your expenses, and then you're only profiting $10,000, well, that's something that make the lenders go, So understand also, and I actually got this from a mortgage lender that was telling me that mortgage companies do a look back, and what that means is they go back and they look at your IRS transcripts based on the information you provided, and then they go and do a look back to see if, okay, has this information changed? Because if that information changed, then they can basically take back the loan terms or change your loan terms based on the information that you filed. That's definitely not a position that you want to be in, okay? But then, when you are amending these taxes, that can also raise an audit flag for the IRS. Because then the question becomes, who are you lying to? Are you lying to the IRS about your income, your expenses and deductions and all that? Or are you lying to the lender? Because, see, with mortgage fraud, for a federal conviction, you can get up to 30 years in prison and $1 million fine. Now, I haven't seen people get that, but it's possible, right? Because when you choose the crime, you don't get to choose the consequence. So just know that you can get up to 30 years in prison for a federal conviction concerning mortgage fraud and $1 million fine. Now, usually when you see these convictions, you also see convictions on like conspiracy, wire fraud, intent to defraud, a financial institution. Those kind, you don't really see a conviction that says mortgage fraud. There might be other types of, different types of schemes involved, short sales, and all kinds of craziness going on. There are a lot more people convicted of mortgage fraud than actually hits the news. Let me tell you that. Okay. So yeah. And here's the, where's the highest instances of mortgage fraud? Okay. So the highest instances of mortgage fraud happen in New York, DC, New Jersey, New Mexico, and Florida, where the highest instances of mortgage fraud happen. So, the thing that you have to be concerned about as the buyer is that, what, you could get audited from this. And again, the question becomes, did you lie on your tax return? Or did you lie on the mortgage application? Both offenses which are punishable by prison. Okay. And so I have a case for you. The most recent case I could find that dealt with mortgage fraud that happened in February 2015 that involves a CPA, and he pleaded guilty to mortgage and tax charges. And so I don't know exactly what his final sentence is. I was trying to find that, but I couldn't find it. But here's the deal. So it says false information submitted to the lenders included, among other things, representations concerning the borrower's employment, income, assets, and intent to occupy the property. False representation about the income that the borrowers received. They overstated their true income. And then there was the CPA that was involved that assisted the scheme by preparing the returns for some of the borrowers that contained the false and inflated income. Okay, these people were lying about their money. And so one of the things that the institutions want to get from, CPAs, tax professionals, they want to get a statement from us verifying this information, which then puts us on the hot seat. This is why you will be hard pressed to find a CPA or an enrolled agent that's willing to write these letters for you because of this type of liability. That you, as the person needing these letters, you could be lying to us. We have no idea, but we get dragged into this because of the foolishness, right? Because the first thing folks want to do is throw somebody else under the bus. I am not about tire tread. So this is what you have to be concerned about as the professional, writing these letters, preparing these returns. If you know that this is something to do with mortgages, again, while there is nothing wrong on the tax side, there's nothing illegal there. It could be mortgage fraud on the other side. And so you have to look at the liability for that for yourself. For my self-employed, for my home business owners, listen, prepare the returns, go make the money. Okay, plan this stuff out. If you are planning to buy a home, a car, or whatever, and you need to qualify for a loan, you need to plan those things out so that you are not just randomly, what looks to be random, amending these returns, because see, that's when the red flags come up, not only for the IRS, but also for these lending institutions. And the last thing you want to do is wind up getting prosecuted for falsifying this information just to qualify for a loan. It's really not worth it. So I encourage you, when you are thinking about, like we said, we want our business to fund our lives. But when we're talking about qualifying for loans, this is when you need to go and sit with a reputable lender to say, hey, what do I need to do in order to qualify for this loan, so that you're not having to do all of these little shenanigans of amending. And because even the IRS will tell you that if you don't claim your all of your expenses in the year that you're taking, then that's really not operating as a business. And if you are audited and found to be doing this kind of stuff, they can disallow your whole thing, even though you may be in business absolutely fine. But because you're playing these kinds of games and not claiming all of your deductions and all of that, you open yourself up to that kind of thing. Why do it? Why even put yourself in that position? So instead of doing all of that, go make the money. Go find out what your requirement is in order to qualify for whatever loan it is that you want to qualify for, and then do that. But don't go, amending your taxes all willy-nilly. And like I said, I think as of 2016, it is legal to go and amend your taxes in order to qualify for a loan, but that's going to come with an additional tax bill. And lenders want to see that you've actually paid that tax bill, like with a canceled check or your IRS transcript or something that shows that you actually paid that additional tax bill in order to, to get that loan. But then when you go back, like, okay, well, I want to amend it again. Just don't do it. So, mortgage fraud, like I said, is, there's nothing illegal on the tax side as far as I know. Let me say that. Let me also say that I am not an attorney. Go consult with an attorney. Let me say that before y'all be trying to drag me into court. Right. But like I said, there's you can amend your taxes anytime you want, as many times as you want. That's your right as a taxpayer. But just know that, by doing that, you are, you're really opening yourself up to, to doing some illegal stuff. And for me, it's just not, it ain't worth it. Right. So this is why you plan ahead. This is why you have these discussions with your accountants and your tax professionals about, the things that you want to do coming up so that you can actually make a plan. It is called tax planning. Right? When you have those conversations with your lenders, then you are making a plan so that you know what you're doing going forward and not trying to, to go back and undo and redo and all of that. So I hope you guys take this, take this little bit, and please, oh, please, oh, please do not play those kinds of games with the governments. Just plan ahead. Just know that if you are a self-employed person, I know that we want to write off everything under the sun. If we think we can write it off, we want to write it off. But when you are talking about qualifying for a loan, you need to know that you need to reduce your expenses so that you have the profit to qualify for that loan. After you get in your house, you want to, make sure that you can make all of your mortgage payments. Because see, listen, if you mess around and start missing mortgage payments after you qualified for this loan, because that's what happened in this case that I just shared with you, is that people were qualified for these loans and then they couldn't make the payments. And so they resulted in foreclosures and millions of dollars of losses to financial institutions. So when you self-employed, the last thing you want to do is be amending your returns back and forth and then mess around and miss some payments. Then that's when the lender goes back and say, okay, were you even qualified for this loan? Like, what happened with your, with your taxes and all of that? And if it's determined that you lied, then you open yourself to be, going to prison and such. Okay. So, and if you, as the tax professional that's watching this, if you know someone is trying to amend their taxes after they have qualified for a loan in order to reduce their profit and get a refund of those taxes, I urge you to tread very carefully. Okay, talk with your insurance company, all of that stuff, to understand what your culpability is in this type of situation, because you will be one of the first ones to get thrown off the bus should something go left. Okay. Let's just be real. All right. So thank you guys so much for tuning into Home Biz Tax Talk. Again, we air Monday through Friday, 9 o'clock-ish, and you can come right here to get your questions answered about your home business taxes. All right. Have a great day, and I will see you all next time. Bye.